As you already aware, I asterisk understand asterisk, but I'm not a lawyer. I discovered that there was a lack of openness regarding the board's relationships. We're having a vote now that everything has been fully revealed, and I must say that it's more overwhelming than I had anticipated. $2,600 per share, then. Sure, let's do the math. How do you get there? What must occur for all of it to occur? Like all of our price targets, this one is for the next 5 years. Additionally, a platform for autonomous taxis. Tesla's platform, so robo-taxis, which is a SaaS-like model, must be established. This turns into a recurring business model, a portion of each mile traveled on that network of autonomous taxis, instead of just selling a car and possibly the software package. Extremely large margins. Investors in Tesla can now look forward to a more promising future. A number of variables will affect Tesla's stock price in the upcoming weeks. The June 30th announcement of production delivery data is one important event that is coming up. What are the potential ramifications following the mid-July earnings, and how big will this be? In addition, everyone is focused on the much-anticipated robotaxi event on August 8. We'll also talk about Cathie Wood of ARK Invest and her prediction that, thanks to opportunities in the robotaxi industry, Tesla's stock may reach $2,600 by 2029. Financial analyst Larry Goldberg will be joining us to explore these subjects. However, before we begin, please remember to subscribe to Tesla Stock News and use the like button. Let's get going now. Many people think that the latest vote has removed a big burden from Tesla's stock, which Dan Ives says might increase its worth by $20 to $30. The stock has had a significant rise, and it is anticipated that this upward trend may continue. Uncertainties still exist, though, especially with regard to impending court rulings, which continue to cloud the stock's future course. According to the most recent May figures, sales in China have somewhat recovered. Following a period of stagnation, this recovery is notable and has investors feeling optimistic about Tesla's performance in one of its biggest markets. But since these figures are a snapshot rather than a clear trend, it's crucial to keep a measured viewpoint. The situation is more complicated when we look at Europe. Sales are being hampered by the elimination of EV incentives in Germany, as well as other regulatory issues. It is anticipated that Tesla's performance in the European market would be further strained by the impending tax changes on the Model 3, which are in line with the new China tax. Larry Goldberg asked, "How do you see these factors influencing Tesla's stock in the short term, given the backdrop of these conflicting signals from China and the challenges in Europe?" Furthermore, considering the state of the market, Tesla's long-term prospects greatly depend on how well it handles these legal and commercial obstacles. Tesla is at a pivotal point in its history, and how well it can adjust to these circumstances will probably determine how it develops in the future. Regulatory obstacles that affect the delivery of electric vehicles are one of the unique issues facing the European industry. There is a glimmer of hope despite these obstacles, as recent reports indicate that China's May numbers are improving. The assessment of Tesla's stock still primarily depends on its production and delivery measures, even though the conversation briefly shifted from vehicles to robotics and artificial intelligence. Regarding the long run, Larry says he is firmly committed to Tesla, which is based on Elon Musk's visionary leadership and forward-thinking initiatives, in addition to the company's present success. This long-term outlook stands in contrast to the erratic short-term swings that frequently react irrationally to both good and bad news. There are a lot of expectations and worries about Tesla's financial performance as the company's earnings announcement, which is usually planned for the third week of July, draws nearer. This quarter, analysts predict earnings will miss, but not by much. According to current projections, earnings could drop below 80 cents per share. This number shows a significant drop and suggests that 2023 might be seen as a year of reorganization, with an emphasis on long-term strategic changes rather than short-term financial gains. The performance of Tesla in important areas, particularly China and Europe, is the main cause of this expected profits miss. Even while sales in China have recently shown indications of revival, the market is still volatile. Although the May sales rebound is encouraging, it is too soon to announce a sustained rising trend. Investors and analysts will be closely monitoring if this recovery can continue into the upcoming quarter. Europe is a more difficult situation. It is anticipated that the elimination of EV incentives and upcoming tax rises on vehicles such as the Model 3 would further reduce sales. The entire financial outlook may be impacted if these regulatory changes result in a sizable deficit in Tesla's production and delivery goals for the area. Beyond the recent financial announcement, it appears that Tesla's future is closely linked to its forthcoming events, particularly the highly anticipated robotaxi event on August 8. It is anticipated that this event will provide an overview of Tesla's upcoming technology developments. It is yet unknown, though, if this presentation will be successful and how it would affect stock values. In the past, developments that are seen as excessively futuristic or not immediately apparent in terms of revenue creation have caused a negative reaction in Tesla's stock price. Overall, according to a recent research by ARK Invest, the potential of robotaxi services may propel Tesla's shares to as high as $2,600 by 2029. This hopeful prediction depends on robotaxis being successfully deployed and scalable in the upcoming 2 years. According to ARK's study, which is renowned for taking into account a variety of simulations and probabilities, there is a 50% chance of achieving this goal. Even more cautious projections place the stock far higher than it is presently. Given their remarkably bullish perspective on Tesla's future, financial analysts are attentively examining ARK Invest's estimates. According to ARK Invest, Tesla's stock might hit a bull case target of $2,600 per share by 2029. This forecast is notable, particularly in contrast to some analysts' more modest projections that the stock may only hit about $2,000 throughout the same period. Strong faith in the potential of Tesla's robotaxi projects and the wider uptake of autonomous driving technology are the main drivers of ARK's optimistic outlook. They contend that these developments will revolutionize Tesla's business strategy and greatly increase its earnings. This hopeful prediction is supported by a number of intricate models and simulations that account for a range of market and technology advancements throughout the ensuing 10 years. However, detractors and wary analysts doubt the viability of such quick developments and market uptake, arguing that a number of operational, legal, and technological obstacles may slow growth and adoption, and possibly result in a lower valuation. The discrepancy between these forecasts demonstrates the differing levels of assurance and conjecture regarding Tesla's capacity to spearhead and profit from the autonomous vehicle revolution. According to ARK's calculations, there is a 58% likelihood that Tesla will introduce its robotaxi service by 2025. Some, however, view this option as optimistic, given the practical challenges that have not yet been sufficiently addressed. The likelihood of a 2026 launch is 38%, the likelihood of a 2027 launch is 4%, and the expectations for 2028 and thereafter are very low. This timeline represents a range of opinions among stakeholders and experts regarding the viability of implementing such a groundbreaking technology in a timely and seamless manner. For example, more cautious forecasts indicate that early commercialization would probably take place in a more limited regional pilot setting, refuting the idea that Tesla would quickly enable robotaxi service throughout a whole nation. This method is more in line with standard operational plans for using cutting-edge technologies in practical settings. The parameters of commercialization and the scale at which these services would be considered operational are also up for debate. The realistic strategy would probably entail incremental introductions in specific towns or areas, ensuring that any operational bugs are worked out before a larger scale deployment, even though some might anticipate a nationwide rollout. In contrast to ARK's sanguine perspective, other analysts have a more realistic attitude, predicting that although the robotaxi service would be a major advancement, the initial rollout may be more sluggish than ARK's model indicates. By modifying the odds, they may make the case for a greater chance in subsequent years, such as 2026 or 2027, taking into account the difficulties and any holdups in reaching complete operating capacity. The predictions for Tesla's future are varied and fascinating as the company continues to negotiate the challenging terrain of autonomous driving and robo-AI. According to an updated model by Tasha Keeney of ARK Invest, autonomous driving may be among the most important developments in AI, which would have a big effect on Tesla's operations and stockhold.